Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hi guys, this is Aditya Vora here. I am sure the Russian President, Mr. Putin, is keeping your portfolio volatile over the past fortnight. On a lighter note, the writing was on the wall. After all, Putin has put in his name. The small cap and mid cap stocks have been hammered, black and blue. Every time when there is drawdown, investors always talk about the need and importance to be in good quality stocks. Moreover, it is important to invest in companies which are run by good management. In this video, I am going to offer a contrasting view on the whole concept of management quality. I will be talking about how the investing community is biased towards certain companies and managements and why management quality is overrated. Please note, this is different from investing in companies with corporate governance issues. So to start with, over the weekend, a young 21-year-old aspiring investor who had just finished his graduation met me at a family function. On realizing that I am an analyst, he came up to me for advice on investing. On a lighter note, whenever I want to be politically correct or a generic question is put across, I normally answer the question with a question. It always works. So I asked the young kid, what do you look for when you want to invest in a company? Management quality is what he replied instantly. This was a perfect answer for someone who hasn't even started investing in his career. Over the years as investors, we have been told that one of the most important parameters of investing is quality of management. Warren Buffett once said, you should invest in a business that even a fool can run, because someday a fool will. Does it mean Buffett is saying management is not important? No. Buffett's point is with regards to the complexity of the business and not the integrity or aptitude of the management. The more complex a business, the more it is dependent on management expertise. On the other hand, a simple and an effective business runs itself. But the billion-dollar question is, how do we judge management quality? Is it so easy to form a judgment between good and not so good managements? Also, when we talk about management quality, we tend to focus on things such as integrity and vision. Words like pedigree are often used when evaluating companies. My view, management quality is important but overrated. It is difficult to figure out what really goes behind the scenes. Negative things which are clear should raise a red flag. However, identifying the thin line between good and bad is an art. So here are some food for thought on why management quality is overrated. To start with, why is the Maggi Fiasco different from the Wellspan fraud? So let's talk about this. I am sure you must be aware of the ban which was imposed on Nestle Maggi due to high levels of monosodium and lead, which was beyond the permissible limit. Who could have imagined this from Nestle? It's one of the most ethical companies in the world. Does the Maggi Fiasco make Nestle a fraudulent company? When we talk about integrity of the management, wouldn't this qualify as an example of bad management practice? Okay, let me give you another instance of an Indian company, Wellspan India. Wellspan India is a leading exporter of home textiles to North America and Europe. It counts retailers like Walmart, JCPenney, Bed Bath & Beyond and Target as its key customers. However, in 2016, Target, a major client, severed ties after an internal investigation revealed Wellspan had misrepresented its 100% Egyptian cotton sheets. Walmart too cut its ties with the company. The perception about Wellspan India in the investing community remains tainted. Words like bad management, poor corporate governance were attached to the company. Now, this comparison between Nestle and Wellspan is on this specific topic only. It does not compare Nestle and Wellspan in any other aspect. But the big question is this: both Nestle India and Wellspan have reported frauds. Why is it that the perception about corporate governance is different for these two companies? Why are the so-called coffee can investors not talking about corporate governance issues in Nestle? Isn't too much focus on corporate governance overrated? Now my second food for thought is, managements will tell you what they want you to hear. I have not come across any management who will openly acknowledge their company is doing badly and will continue to do so. Have you ever heard a management say, the worst is ahead of us? They always say the worst is behind us. In that case, how do we judge the management or the company's prospects? The management will tell you what it wants you to hear. Now my third food for thought is the notion that the management knows the future. Let's talk about Bill Gates. Bill Gates sold majority of his shares before leaving the board in 2020. I am sure you would appreciate the fact that nobody knows Microsoft better than Bill Gates, the guy who founded it. Microsoft's performance has been amongst the best over the last 2 years. This is especially true after the pandemic, where its cloud business accelerated. If Bill Gates wouldn't have sold his stake, he would have been richer than Elon Musk and Jeff Bezos combined. Now that is quite a statement. Who would have thought that Microsoft's best days were ahead of it when Satya Nadella took over? Now my last contention is, how many people in the early 2000s knew Aditya Puri was a visionary? You see, many investors talk about betting on the management, especially during the early days of the company. HDFC Bank today is synonymous with quality in the banking sector. But back in the late 1990s, HDFC Bank was an upcoming bank led by Aditya Puri. My question is, how many people knew Aditya Puri in 1990? How many of you would have bet on a young chartered accountant brought in from Citibank Malaysia by veteran Deepak Parekh to run the bank? Remember, HDFC Bank became one of the finest financial institutions in India after 25 years. As an investor, you need to do your due diligence before you make an investment. Despite of the handicaps I have mentioned above with regards to judgment, there are quantifiable and objective filters which should be used to identify management quality. Let us see what they are. My top 3 management quality filters are: A. Stay away from all companies or promoters who have any political affiliation. That's danger. B. Always check what the management has said in the past and what it has done. A variance of 10 to 15% between words and deeds is fine. However, a major deviation or a repetition of mistakes is not acceptable. Avoid such companies. C. Check the management's remuneration with respect to profits of the company. Expenses like the promoter's travel need to be checked in context of the bigger picture. These filters are easily identifiable and can be quantified. So dear reader, I hope you will use these filters and improve your judgment of management quality. Do write to me about the video. Thank you.